I teach entrepreneurship. I've developed the material that you're seeing here. I founded the Legacy Entrepreneurship Conference, which you may have attended a couple of weeks ago, and the V2 Pitch Competition in the spring. Spring of 2017 will be our 6th year. We've had tremendous success with it, great growth, growth in entries, growth in audience, and growth in the prize fund. Here are some key dates that I'd like you to jot down if you're interested in that V2 pitch competition. So there's a business model creation workshop on the 7th of February. Then we push all the way into the spring. The pitch decks are due on the 6th of April. We'll announce the finalists on the 12th of April. And then the V2 pitch competition will be on Thursday, the 4th of May, 2017. So make a note of those dates, and we'll keep on it. So let me get started by talking about the stage at which what I do for you will help. And I have this idea that you go from an inspiration to realization. So what do I mean by inspired to realize? Inspiration is your bright idea for a product, an app, a service, a restaurant, a food truck that you think will serve a purpose and will draw an audience and attract a market. The first question then is, all right, so I've got this idea, where do I go now? What do I do next? And I understand that. I've been a part of a founding team or a founder in 3 startups. 2 of them were very successful, and one of them I learned a lot. And I've advised any number of different venture teams and entrepreneurs, both in my classes here at USD, my classes at other universities, and just one-to-one counseling and coaching. The other thing that I've noticed is that many entrepreneurs don't wait around for advice to get started. They just get going. They start building a prototype, or they start coding, and they start thinking about the next step while they're doing things. So another way in which we're talking today will help is if you're started and you have questions that you're not getting good answers to, or if you're underperforming, or if you're confused and you're underway, but you still don't know what the next step is. What we're talking about today will help you there as well. And the starting point is this. So I make this statement that sounds kind of controversial, that I don't believe in a business plan. But I do believe in planning for a business. To me, a business plan is a 50, 60-page document with sub-plans for marketing, finance, and so forth. So 2 things to me. It's hierarchical, top-down. It's functional, organized around traditional departments in a company. And it's usually big. It's also static. And it takes the entrepreneur offline from building your business. If you're writing up a plan, you're not building your business. Now, I had the idea that if we could design a way of planning that's efficient, flexible, fast, and relatively inexpensive and simple, that would be a great advantage over the traditional business plan. That's what this is. So right now, I call it the lawless venture model. It's not a model for lawless ventures like smuggling or something, but it is my last name and then the venture idea. So this is a starting point for what we're going to talk about today. It'll give you a platform for building your pitch deck. It consists of 10 challenges and questions under each challenge that I will walk you through very quickly. All right, so you build this venture model and you start thinking through things that you may not have thought of before. Do I have a robust cash model? Do I know what outside assistance I'm going to need in marketing, in coding, in financial advice? Do I know really who my market is in really specific, crisp terms? These are the kinds of things that you check off by going through the LBM, and you may find as you think those things through thoroughly for the first time that you need to change something. So your starting point is this bright idea, and your hypothesis, your assumptions about who's going to buy it, at what price, and so forth, you may find after you do a gut check on it that you have to change something. So pivot at this point is perfectly fine and acceptable, no worries. The next question is, how do I know anyone is going to buy my product? And I urge you to get into the market with something that you can get feedback on as early as possible. So the next step is proof of concept. In my classes, this is actually a document, a deliverable that my students turn in. In a real situation, it's just your proof of concept to convince you that you're on the right track. And at some point, it will be proof of concept for other stakeholders like investors, people who you want to recruit to work with you on your management team, maybe strategic suppliers or customers. So this is really important to have some evidence that somebody really wants your product, and I'll go into that. So you do proof of concept, and you may find something needs to change there as well. So there's another opportunity to pivot, go back and change your venture model or change your inspiration. The next is, how do I pay bills from my venture before my venture starts paying for them? So before you make money from operations, before you start selling things and have cash coming in, how are you going to pay the bills? You're probably going to have expenses before you start making money. And that's where you get to the next stage, which is funding. And we talk about funding sources as branching in two directions. One of them is you say, I have a development path for my venture that I can pay for by myself. So I'm going to do all the work. I'm going to have my apartment or my home be my office for the time being. I'm not going to spend very much money, so I'm going to fund it myself. So I can pay the bills for my venture in the meantime. So that's the branch into self-funding. And now you still have to convince people to work with you. So it might be your CFO, the next person to partner with you. Or it could be a strategic, like I said, a supplier, someone who's going to give you in advance maybe terms on buying some equipment. Those kinds of people you still need to be ready to explain to them in simple terms and very quickly what your venture is about. So you need a pitch deck here. Now, you may be surprised that I'm talking about a pitch deck when you're self-funding, because I think most of us associate a pitch deck with getting in front of investors and having investors believe in you and invest in you. But that's not the only way or time that you're going to use a pitch deck. So if you get to the point of building your own business, you're self-funded, you have choices then. You can do what I call continuation. You're going to run the business as your career. It's going to support your family. It's going to get you a new car every 3 years. Take your vacations that you want to, send your kids to college, even at USD, and you'll be able to pay for it all. The other branch is on outside funding, and this is where angel investors and venture capitalists come in. This is where you look at your cash model and say, you know what? I need money on a timeline and in amounts that I can't support on my own. I've got to go get outside money. So now we're in familiar territory for a pitch deck. And you have to convince people to invest in your new venture. So here a pitch deck gets you it's time in front of an investor. It's an opportunity to explain your business and convince them that you have something, create confidence in you, attract their attention. I'll go into this later on in our meeting today, but that's where we're going. So if you do get to pitch and that you do get interest, you're not going to get it on your pitch day. So pitch, as I'll explain a little bit later, can be anywhere from a minute to 15 minutes, typically. Ours at USD is 7 minutes of platform time. But you're not going to get a meeting then. They will ask you for a meeting, maybe 2 or 3. They'll do due diligence with you. And then they'll say, you know what, we want to invest in you. Here are the conditions on which we'll make the investment. And that document is called a term sheet. It's not an agreement to buy shares yet. It's a good faith set of conditions under which the investment will be made. So your pitch gets you a term sheet, that's all, if you're lucky. And then I make this argument that investors are looking for such a big ROI on such an aggressive time schedule that it's almost impossible for you to pay them off from operations and keep your business going. Can it be done? Yes. Anything's possible in entrepreneurship. That's why we're here. On the other hand, it's very, very difficult. So think about this. In this space, almost everything I say is going to have 2 or 3 standards of deviation around a number I give you, right? That said, think about this. A typical investor is going to want 10x their original investment in 5 years. So you think about taking $50,000 or $20,000 from an investor and being able to pay that and keep your business going within 5 years, starting a new venture. That's very, very hard. So I typically say that when you branch off into the bottom branch, outside funding, you're going to end up in an exit. Think about the exit. Think about what that's going to look like. IPO gets a lot of publicity. Initial public offering, it means your venture goes into a public market like the NASDAQ or the New York Stock Exchange, American Stock Exchange, Pacific Stock Exchange. Very difficult, very small percentage, single digits of exits. Most exits are going to be trade sale, which means a merger or an acquisition by a company that likes something about your business. They like your team, they like your intellectual property, your customer list, something like that. And they're making a strategic investment to complement their ongoing business. Okay, so that's the starting point. Let me inhale a second and ask you for any questions, clarification at this first part of the presentation. Okay, if I had time to discuss, I'd ask you, where are you? But maybe later. Okay, so let me shift off. I'm going to load up another PowerPoint file and talk about the LVM for a minute. So think about this as an alternative or a first draft if you have to do a business plan, or as a substitute for a business plan. The idea is to focus you on the tasks that you need to accomplish and complete in order to develop your venture. So what am I talking about here? It is a model that helps you organize your thinking, anticipate decisions that you're going to have to make into the future. I think of it as simple, practical, efficient, and flexible. In contrast to what I understand to be a business plan, which is a big document with a lot of detail in it and very hierarchical and functionally oriented. If you need a business plan, so I've talked about this in front of audiences where there's some kind of old school person who's been around a long time, and they say, you can't get money without a business plan. Well, you know what? You can. Actually, this may be enough. But if you go to like a banker, maybe, they might say, where's your business plan? You can build a business plan in a couple of hours based on this. So I like you to think about this as a starting point. Build a business plan, build financial performance from this if you need to, but this is a tool for you as the entrepreneur. Okay, so at the inspiration stage, which is what I just showed you, this will help you to figure out what to do next. If you're underway, if you're working already and you might get some drift, you're kind of losing track of what you're doing, you're underperforming, you're not getting the results that you want, this will help you there as well. And as I showed you in the Inspire to Realize slide deck, it'll help you decide when to adapt or when to pivot. It consists of 10 challenges that I think are fairly complete in covering the space that you need to think about as an entrepreneur. So these, and I'll click through each of these pretty quickly. Take your questions as you go along. I'm talking fast because I want to get to the pitch deck, which is why you're here, but I'm happy to stop and answer questions if I'm going too fast or if you need clarification. So here are the first 5, and here are the second 5. And we've just handed out a worksheet. As I go through this, you might just write down your current thinking about each of these challenges. Each challenge has a set of questions under it. And as you think them through, you might say, wait a minute, I need to think about that a little bit more. Or I've got a great answer for that challenge. Okay, either way. So for now, complete and final answers are not the point. It is that you have thought about the challenge, you're aware of it, and you know that you need to think about it more and dig into it. Maybe bounce it off of a mentor or a coach or an advisor, an attorney, or a financial analyst. Okay, so first challenge, founder, you. Why are you doing this? Not all of us maybe want to think too deeply about that question. That's a joke. You do want to think about why are you doing it? What's your reason for it? Is it personal satisfaction? Do you think you have something to contribute to the world? Do you just want to make a lot of money? Do you want to be independent, run your own business? So think that over. Second, this is going to be risky. It's going to be hard. So do you want to take on that challenge of hard work over an extended period of time? Maybe a lot of negatives, a lot of no's from various people. Do you want to take on that risk to your family and your personal wealth? Even if you take outside money, the first stage is always going to be your money. And how positioned are you to fund your venture in those early stages? So how much risk are you willing to take? How much risk are you willing to put on your family? How hard are you willing to work? And why do you want to do it? So this is the founder challenge. Next one, now we get into probably where you've been thinking already. I think almost everyone starts with, I've got a great idea. So I do triathlons, and I love to give the example of these bungee cord shoelaces that a lot of triathletes use. So when you do 3 parts of a race, you do a swim, you get out of the water, you get on a bike, and then you get off the bike and you run. So in the transition from bike to run, you're sitting there in the grass next to your bike, and you're tying your shoelaces, and your fingers are numb, you're cold, you're nervous, and you take seconds and seconds and seconds to tie your shoelaces. So here's the bright idea. We designed shoelaces that are like bungee cords, and they turn your running shoes into slip-ons. I think that's awesome, right? So cool idea. Now, describing the product features is the first part of this challenge. Can you envision it? Can you envision a prototype? Can you build a prototype? Do you have a set of specs? Can you tell someone what your product looks like, how it works? This is really important for the pitch deck that's coming a little bit later on. So physical products are the features, including how it works. Does it work? What is the user experience like? And this is really important as well. How many engineers? Okay, I had a minor in industrial engineering in my PhD program, so I'm like a shade of an engineer. And I know that there's a tendency to focus on the product, MEs especially, I think, but everybody. Focus on the product, design it, make it lighter, faster, more compact, whatever, without really thinking much about what is the user experiencing with my product. This is what I urge you to do at this point. What is the user experience? What is that going to look like from their perspective? So that's an important piece of it. Now, I capture that in economic terms with these initials DVD. So I'll show you what that is. This is the market features. So think about 2 parts to the product. Product features, market features. And the physical part ought to be pretty obvious. I'll talk about the market features in just a second. I use the analogy of conjoint analysis for you to evaluate your product. Conjoint analysis is a statistical procedure that allows an analyst to break down the parts of a product that create value for the customer into individual elements. So how much does the brand matter to purchasing your product? How much do aesthetics matter? How much does functionality matter? Ease of use, compactness. So for whatever your product is, an app or a machine or whatever, or bungee cord shoelaces, what parts of it do you think create value for your customer? And I find that not necessarily doing the statistical method, but just the idea behind it of breaking down your product into individual elements and weighting them is a very useful exercise for entrepreneurs. So when you break down your product, you will get closer to evaluating 3 dimensions of competitive advantage. The first one is, even though they're out of order, my wife says I ought to change the order to VDD, but the first one is value. Value has a dirt simple question to go with it. Why is anyone going to pay for your product? I love to give the example of Starbucks. Right now, it's PSL time. Who knows what PSL is? Pumpkin spice latte. All right, so pumpkin spice latte. Why is that worth more in your hand than whatever it is, $6 on your credit card? That's value. Somehow it's worth it for you to trade $6 on your credit card for that drink. Okay, that's value. Think about, why is your customer better off giving you their money in exchange for your product or service? Right, so that's value. That's the first element. If you've got value, then you have to create a reason for your customer to buy that product from you instead of somebody else, or, very importantly, in place of what they're currently doing. So in my bungee cord example, cloth shoelaces, regular old shoelaces, are what's being used now. There has to be differentiation from those shoelaces in a way that people recognize, and a slip-on is more valuable. A slip-on running shoe is more valuable to them. So speed, right? Manual dexterity. Your fingers are numb, you're nervous, you just pull the shoe on and you're done. You're not fumbling tying your shoelaces. Those elements are the value piece. Now, the same characteristics of the product in that conjoint analysis can also differentiate. So if someone's offering a similar product or an existing product that you're trying to substitute for, why should they go to yours? Okay, everybody clear on value and differentiation? Anybody need a little bit more example or explanation?
Just a quick question.
Yeah.
Could you apply that to a service offering as well?
Absolutely. Yep. Yeah. So think about what about the service creates value? So it's convenience, it's speed, it's price. So those same characteristics create value. And then, do they differentiate from someone offering a similar or the same service? Yep. Okay, then the second D, the third element, is durability. So if you have value and differentiation, the next question is, how long will that last? So a good example, a clear example, is a US patent, 20 years of life. So you can plan to have competitive advantage, everything else equal, for 20 years with your patent. Or you can say, you know what, the typical market life for a console game is about 6 months. The industry norms are about 80% of your sales are going to be in the first 3 months, the rest in the next 6 months, and by the end of a calendar year, nobody wants to buy or there's just a trailing edge of demand. Nobody wants to buy the thing anymore. So that means that you have to build that into your strategy. So can I get into the market, make back my original investment, make back the ROI that I need within the period of time that I can predict? So those three elements, I think if you cover them, that's the market side. Combine that with the product description, and you're done with the second challenge. Questions? So the question was, I'm just at the prototype stage. I don't know how durable my product is. How do I deal with that situation? And basically, there are two ways. One is you work on the time frame. So can I extend the durability so that I'm pretty sure I can get my ROI? Or you take the durability as given and you say, can I get my ROI within this fixed period that I'm facing? Those are the two choices. Yeah?
With competition and imitation, regarding application platforms and stuff, how close can people really get before coming into legal terms of getting a patent on it? Pretty much?
I'm not a lawyer. That's the first thing I have to say. Yeah, there is a USD entrepreneurship legal clinic that would have a great answer for you on that. The copyright laws are actually not very strong. Just a couple of words different, and it's considered new. Patents are a little bit stronger. Okay, so the next is your market. And I use the term addressable market. And by that, I mean some sense about who's really going to buy your product. When people come to me and say, here's my market, it's everyone in the United States between 16 and 25. I say, okay, how do you start selling to that? So I want to know what parameters, what description of your addressable market you think makes sense. And again, this is the idea of being user-oriented, having a clear vision of who you're selling to and what their needs are. So you hear terms like pain point or problem that you're solving. These are the kinds of things that you have to think about at this stage. So how many people are going to buy your product? On what timeline? So you're actually talking about building out a supply curve and a demand curve for your service or your product. Are they repeat buyers? How much is it going to cost to acquire a customer? How long will they stay with you? What's the lifetime value of a customer? So these are all addressable market type issues. And I think that if there's a caution I can give you at this stage, it is as students, we tend to go to the information sources that are most accessible. There are a lot of opportunities for different databases out there. That's not wrong to do, but ask yourself the question, is this really giving me a picture of who's really, really going to buy my product at my price? On what timeline? Okay, that's addressable market. It's probably one of the two most important parts of the LBM and your challenges. Questions about addressable market?
An optimistic model versus a more realistic model to give yourself a frame of reference. But if you're pitching this, don't you want your addressable market to look as big as possible?
Not if it's not. An investor will see right through that. And an investor will want a realistic estimate. And it's kind of a gut check on you. Do you know what you're talking about? So if you think you can serve, like I said, everyone in the US within a certain demographic in the first month, they'll stop listening. But if you can give them what looks like a workable picture of your market, I think you're much, much better off.
An example that we hear a lot with apps is they give huge numbers of like everyone in the world that has a phone, right? So that's something that,
Yep.
especially in the app, is something we hear from students all the time. And investors and people that know about that space are probably not going to listen because it shows you don't really understand who you're selling to.
Another piece of hitting on this is that optimism is what drives a lot of early stage entrepreneurs. So I really do think that my market is the universe. Why not? Well, it's probably not. And the other piece of it is building out that timeline. How many people do you think you can acquire in the first quarter, in the second year? That's the important part of addressable market. Okay, next is development. You can think about this as the closest part of building out a timeline or using a Gantt chart. It is to lay out the tasks that you think you need to accomplish to get to market. This is extremely important and it's extremely simple. When do I need to start renting equipment? When do I need to pay attorney's fees? When do I need to hire a person? When do I need to bring someone in as a contractor or a consultant? What is the timeline for building out my prototype and testing it? So this is up to you. What tasks do you need to get to market and how are you going to complete them? A huge part of development is that box that I showed you in the first deck, proof of concept. So you need to think in your timeline, in your development timeline, when and how am I going to develop evidence that somebody's going to buy this? So I use this table to give you an idea about strength of proof of concept. The key word here is super simple, it's confidence. Can I show evidence that there's a market for my product to create confidence in, name it, typically an investor? Now, like I said, lots of variance around everything I tell you. The weakest level of proof of concept, so the lowest confidence level, is your description of how cool your product is. I'm so stoked about my bungee cord shoelaces. There are millions of triathletes. More are entering every year. They're going to love this product. It's easy to put on, and I know exactly how it's going to work. Okay, that might be enough. And people have invested on that much of a description before, but it's pretty rare. So that's the lowest level of confidence. Second is some contact with your customers, but no money transacted. So can you do a survey? Can you get testimonials? Can you do a focus group? Now you've got some feedback from your customers. Even better is to have somebody buy it. So you're going to sell gluten-free brownies, and you set up a booth at the La Jolla Farmers Market, and you sell 100 brownies for 3 or 4 weeks in a row. All right, that's about that level. Some trial sales, some evidence that people are interested enough to give you money. That's the value piece. And then the top level, so that's a pilot product or project or a limited offer. The top level is probably where you don't need the money as much, where you've established your company, you've got ongoing and growing sales, you're scaling your business, and you're acquiring what are called monthly recurring revenues, or MRR. Probably by the time you get to the highest level, you're pretty well established and you're looking for big venture capital money. Earlier and lower down, you're looking for angel money. But those are levels to think about to crystallize this notion of proof of concept. So let me go back to it. Okay, and just a quick word on minimum viable product. You've heard this before. There's a huge, very popular school of thought in entrepreneurship now called lean entrepreneurship or customer development. And a key idea there is minimum viable product. That means get your product in front of customers as early as you possibly can. And maybe scale it down. So if you can, remember that conjoint analogy I gave you a few minutes ago? Think about, can you separate that out and maybe get the 3 characteristics out of 10 that create 80% of the value for your customer. If you have a product like that, you can kind of separate the bells and whistles, the add-ons from the core value, then MVP might be useful to you. Okay, so that's an idea for developing proof of concept. Next challenge is operations. So this is, what is your ongoing business going to look like? Are you going to outsource? Are you going to build your product in-house? How will you present it to your customers? And look at the other ones. How are you going to use social media? Are you going to use analytics? How are you going to convert? How are you going to monetize? Is this going to be subscriptions or page views or selling units? What is that going to look like? And thinking that through is really important. So if you've got development and operations going, you've got most of kind of the machine that's going to create money for you. Now you have to manage it. So what's your organization going to look like? And this has several parts to it. Obviously, it's your management team. So thinking about when are you going to need people with what skill sets and who are you going to bring in? How are you going to compensate them? And importantly, and not very, honestly not thought of very often, is when are you going to let them go? So you hire people who have a skill set that's relevant to a period of time in the development of your venture, and then you might not need that skill set anymore. And my idea is recognize that up front and build it into your relationship with that person. So instead of hiring someone on a permanent basis to do coding, and when the coding's done, you need someone to maintain it and update it, but you don't need a full-time coder, and you've got an employee who's a coder and you're not using them anymore, they're not creating value. But if you hire them as a contractor for a year or 2 years, and then the contract's over, and they know that at the beginning, you know at the beginning, it's a lot fairer for everyone, I think. So letting go is an important piece of building your organization. Another neglected idea, but I think very powerful for new entrepreneurs, is a board of advisors. So when you think about proof of concept and confidence on the part of investors in you and in your management team, anybody know what the major signal, the major indicator that investors look for in the to have credibility of their management team? It's prior experience as an entrepreneur. So there's a trap for you. If you're a first-time entrepreneur, you don't have much prior to show, right? So what do? One solution that I thought of that's very effective is that you get kind of a halo effect or referred credibility from people around you. Investors are really important this way that you might not have thought about. Investors don't just give you money. They can give you credibility if you get the right investors who have a reputation themselves. If you can attract a board of advisors with their own reputations, that reflects on you. So think about a board of advisors as part of building out your organization. And then think about how do you want to organize yourself. So very quickly, early ventures up to a head count of about 15 are in a phase that I call self-organizing. And that means there are titles, like there's a CEO and a chief inspiration officer and a chief get everything done officer, those kind of cute ideas. You've seen that before, right? But if it comes to Friday afternoon and a shipment has to go out, you don't have the chief financial officer saying, I'm the finance guy. I'm not going to go out on the loading deck and tape up boxes. No, they go out and tape up boxes. That's what needs to get done. That's the notion of a self-organizing company. That's usually what startup companies look like up to a certain scale of sales, of production, and I use the indicator of headcount. So think about how big can your company be and have it kind of be implicit. Like I kind of know what you're doing, you know what I'm doing. We kind of pitch in, maybe without even saying anything, we know what needs to get done. There gets to a stage where that doesn't work anymore and you have to move into a more formal kind of functional structure. But thinking about how long self-organizing is going to work for you and anticipating the transition to a more formal structure is worth doing at this stage. Cash. So like I'd say, I stay away from a business plan. At this stage of your development, I stay away from corporate financial statements. So balance sheet, income statement, retained earnings, and cash model, I don't do that except for the cash. I say what you need to know right now is when do I have to pay a bill and what am I going to use to pay it? And I urge people to build out a spreadsheet, a worksheet, with your best estimate of when you're going to need to spend money. So think about it. Are you going to rent space? Are you going to have to buy equipment, a new laptop that has new software on it? Do you have to hire someone to write code? You have a cool idea for an app, but you don't know the first thing about coding? How much is that going to cost and when? So you're going to build out a cost model based on cash. And I stay away from expenses because expenses can be manipulated for good purposes, but they can be. And this is when do I have to pay this bill? That's the cash out piece of it. And then cash in is when is the company going to pay for it? So I'm talking about cash from operations. When am I going to get the first check from a customer? Or when am I going to sell my first gluten-free brownie and get $5 for it? Okay. That's the cash in part of it. And so you build out a table, and then it's easy to do a graph if you're visual, and you can see the gap, if any exists, between the time that you start spending money and the time that your business starts returning cash to you. Okay, so this is your cash model. Once again, if you go to an investor or you go to a banker and they say, where are your corporate financial statements? Do them. But you don't need it now for your purpose. And by the way, you probably have heard before that being undercapitalized is the main killer of new ventures. Not having a good picture of your cash and when you have to pay bills. So questions about cash management, the cash model? Important challenge. Then the cash model drives your funding. So this is the branch that I showed you before. I look at my cash model. I can build out my business on a timeline that I can fund it myself. Or, no, I mean, I've got to build this app and I've got to have it built in the first 2 months, and I don't think I'm going to be making money for 6 months or 12 months. So I got to have outside funding. So the funding is the next piece of it. Your cash sketch tells you, can you fund it yourself or do you need to go outside? Then you start asking, how do I cover the shortfall? How do I cover the gap? And then you start thinking about a term sheet and who's gonna fund you, and a number of other questions that go with funding, valuing, term sheet, provisions, and the like. So the main thing is here, go from cash to I can fund it myself or I need outside funding. And this tells you what that looks like. Okay, this says I can pay my own bills until my business starts giving me enough cash to pay the bills. And again, are you okay with the risks? Are you okay with using your personal wealth or using credit cards? And will you pay yourself back? Outside funding brings in a number of other questions, important ones, and this is where the pitch comes in especially. I cover probably 10 funding sources when I do a lecture specifically on this topic. But they go from everywhere from friends and family out through angels, venture capitalists, crowdfunding. There are government programs. There are charitable organizations. There are lots of ways to get money. But for all of them, you need to get your message across, create interest, differentiate yourself, and create confidence in a very short period of time. That's the idea of a pitch. And that's where we go next after we get done with this. Another challenge, I cluster legal issues together, but there are actually 3 different categories. First is, when do you shift from being a sole proprietor, which is how you start, to some kind of legal structure? An S Corp, a C Corp, an LLP, those are the kinds of options. Which should you move into and which one should you choose and when should you do it? A lot of people come to me about intellectual property in relation to the pitch. So I've got a great idea for an app, or I've got a device, and I want to get outside funding, but I don't know how much of it to tell other people about. And I'll cover that when we get to the pitch deck portion. Okay, but what does a patent search cost? What does a patent filing cost? How much is a copyright search, a copyright filing? And how vulnerable are you really to being imitated? And then the last piece where lawyers come in is, for now, there's another slide on this, but it's what kind of relationships do you have with your management team and with your employees? You also need legal assistance around how much of equity to give out for funding, which is the funding one. What legal threats should you apply for? Is there any legal liability from using your product? And how do you protect yourself? And then finally, what is this going to cost to hire attorneys, and when should I hire them? So questions to think about that you may not have before, but are terribly important when it comes to legal questions involving your company. Questions on legal. So realization is the last part, and this is the continuation or exit. You could get through all this, build out your business, it's making money, it's growing, it's scaling, it's to a size that you can manage, you're happy with it. A lot of service companies are like this. You see any number of ads for plumbers in town, plumbing companies, electricians, those kinds of service companies. A lot of those are started off by an entrepreneur, and they're perfectly content to run them with a stable set of customers. The income's fine, they know the business, they're going to keep running it until they're done with their careers. If you take outside money, as I said, the chances are very, very high that you're going to need to exit. And it's not too premature, even when you're starting your business, to think about what that exit's going to look like. So how long do you have before your investors are going to want to get out? Can you anticipate a trade sale, an acquisition? How much do you think your company is going to be worth at exit? That's partly what tells you whether you should go into it in the first place. Can you think about who's going to acquire it? And then what do you think about exit scenarios? So that leads us, that's all 10 of the challenges. And my position is that if you think these things through, you have a really good, coherent, efficient, flexible image of what your venture is going to look like. It tells you what you need to do next. And it is that platform for building pro formas, a business plan if you need them, or where we're going to go next, which is the pitch deck. Okay, so I'm done with this piece. Any questions on any of the 10 challenges or the notion of the LVM as a substitute for a business plan? So the question was, so you're talking about investors in particular, how do you attract investors?
Not only investors, but also people. You need feedback on your idea, right? And how do you make sure that you only get feedback and but also make sure that your idea doesn't get stolen or used by someone that you shared it?
Okay, so first of all, there's no guarantee. You can't be sure. For different audiences, you can reveal pieces of information. This is part of this idea. You think through, how much can I reveal to convince them to invest in me or to help me build a prototype and be as confident as I can under the circumstances that I'm keeping the real important stuff secret. That's about the best you can do. It's kind of balancing it.
Maybe like the non-disclosure agreements and the thoughts around that.
Yeah, so Regina just brought up non-disclosure agreements. Those would work, again, for certain audiences. So if you need someone to do some milling for you, right, to build a device, maybe you could get them to sign a non-disclosure agreement, and that gives them some legal liability to stealing your idea. I have to say, though, that in my experience, trying to get investors to sign a non-disclosure agreement is not only not going to happen, it's going to be counterproductive. It makes you look naive. And if you think about it, if they listen to your idea and reject it, but then someone else comes up with a similar idea and they fund it, and they've signed a non-disclosure agreement, you could go back and say, well, that guy stole my idea and you invested in him, you're both liable. So it's to protect themselves to not sign an NDA. Did that answer? Okay. Okay, give me another second to queue up the building a pitch deck one. So you have the worksheet there. If you jotted down some ideas as you go along, happy to catch up with you and talk about them later on. Okay, this is why you're here. How do I build a pitch deck? What do I do? What does it look like? What do I put into it? What do I leave out? So the vision for this is that you need, as an entrepreneur, a quick, simple, accessible way to convey your vision for your business to an audience that probably is not super interested. And by that, I mean, if it's an investor, I love to give this example. We have a real good friend, a 2-time alum of USD, who's an investor, angel investor here in town. He tells me that he could potentially look at 1,000 pitches in a year. So you're 1 out of 1,000 for this guy. So you've got to get the attention of this person fast. You've got to get them interested. You've got to get them curious. You've got to give them confidence, all in a really short period of time. But investors aren't the only audience. You could also have a pitch ready to recruit employees, strategic suppliers, customers, and others. I try to counsel entrepreneurs not to make the mistake of trying to put everything about their business into a slide deck and into a pitch. This is not explaining your business plan in 5 minutes and 10 slides. You're selling. This is a sales pitch. So you want to think about the needs and the interests of your audience, kind of like the user, being user-oriented in developing your product or your service. This is being investor-oriented in terms of what are they going to want to know? What's going to convince them to listen to me among that crowd of people? So not just a summary of a business plan. This is the key thing. What's special, remarkable, or intriguing or interesting about your venture and your team? Pitches are all over the map. Remember the 2 standard deviations idea? There can be very short pitches, very long ones. There are ones that are video-driven. Crowdfunding sites like Indiegogo, the pitches are all on video. Some are face-to-face, some are they just look at a pitch deck and that's all. But typically, think in 2 parts, especially for the V2 pitch competition. One is the pitch deck, which is typically a PowerPoint or maybe a Prezi file that is 10 slides. That's the number that we use here at USD. 10 slides and 7 minutes of platform time. So you're going to build around that notion. But what does it look like? Well, it could look like a lot of different things. Who's seen the show Shark Tank? TV show Shark Tank. All right, most of us have. There, that format is like 12 minutes, and it's 4 or 5 investors who are not only listening to the pitch, they're arguing with the entrepreneur, and they're arguing with each other. All that's going on. So that's one format for a pitch. It's legitimate, but it's different from what we do. I emphasize simplicity and brevity. So I love this quote from Garage.com. People stop listening at 10 slides, so why have 38? There are resources that I can send you off to. If you send me an email or get in touch with me, I'll send you off to places other than mine where you can get some ideas about what a pitch looks like. Here's what I think you need to say in a pitch. And these are, I think there are 9 bullet points up there. I said 10 slides, so this is not like 1 per slide. I don't want you to be that structured. Entrepreneurs shouldn't be. You shouldn't say, okay, Lala said slide 3 ought to be proof of concept. You ought to be thinking, okay, what do I emphasize? Where are my strengths in this? So starting with your lead, the product, and now you know from the LVM what your product description ought to look like. There's the physical product and there's the market characteristics. Describe what your advantage is, addressable market, any proof of concept, something about your operations and management team, ask and uses, I'll get to that in a minute, and if you have time, summarize and thanks. So that's the structure. I'm going to walk you through each of those and then take questions, and if we have time, Regina's keeping time for me, I'll show a video or 2. Okay, you need a headline. You need something to get your audience's attention initially. Bring them into the conversation. Asking a question is really useful. Have you ever got into T2, which is the transition from bike to run? If you got into T2, your fingers are numb, you're exhausted, you're nervous, you're fumbling with your shoelaces, and you burn up 1.5 minutes tying your shoes. You ever have that happen to you? Yeah, that happened to me, right? That happened to me. Well, I've got your solution. It's bungee cord shoelaces, right? So be empathetic here. Get them to listen to you, to identify with you, to identify with your product, to say, yeah, this guy knows what I need. The bottom bullet point may like be, duh, when would you not give your name and company name? But people don't. So just a reminder. Everyone got the idea of a lead or an opening slide? And another piece of this, by the way, is you. And I need to build this into this because this is about the slide deck, but the pitch is as important. So how you dress. Are you portraying yourself as a hip, millennial app developer? So you're not going to walk in with a suit and a tie and a white shirt, right? It's going to be a t-shirt with a jacket over it and jeans. That's probably what you're going to look like. So don't be inauthentic, don't be phony, but understand that how you express yourself verbally and physically is important and augments or complements what you have in your slide deck. Okay, so everyone got lead? Here's the nice part. If you've done an LVM, then this is going to come very quickly and very efficiently. Describe your product. Can you show a picture of it? Do you have a prototype that you can hold in front of your audience? Quick disaster story. One of the V2 pitch competitions, a guy had an app, and he was going to demonstrate it to our angel investors in the IPJ auditorium. So he walked over and he shows them his cell phone, and there's no reception. And there wasn't any plan B. So he's like backtracking. He's trying to figure out how to, it throws him off his 7-minute pitch. So be able to have your audience get a clear vision simply and quickly of what you're selling. So describe the competitive advantage is the DVD. We've gone over this already. Yeah, question, sorry.
And describe the product. If it's a service, are you just trying to describe the service as well as possible?
Yeah. But you could ask, Have you ever tried to get a pizza at 3 a.m. and nobody's delivering? Well, I'm going to be there to deliver your pizza. You know, like that kind of thing. So you have an idea of you need to convey what it looks like, right? That's the same service question again. Okay, describe the advantages, the DVD, we went over that in the LVM. Describe the addressable market, pretty much the same. LVM, just pull it out. You've done your 10 challenges. This is how you build your pitch deck. But you're thinking now of how do I present it in a way that the audience understands it and that they buy into it. They say, you know what, I'm not a triathlete, but I get the idea of bungee shoelaces. That kind of makes sense, you know? Maybe I don't need to be a triathlete. Maybe it's someone who has arthritis or little kids or something, and this would be a great solution for them too. So they're thinking about, you know, their audience. They're mapping a vision for your company and your audience and your product onto what you're telling them. So do the work for them to the extent that you can. I showed you the proof of concept. This is where you show. I've done surveys, or I've been selling my gluten-free brownies for the last 6 months at Farmers Market, and I've made $500. So you do the best you can. You push it up as high as you can in the evidence categories and to the highest confidence level you can. You want to talk about how you're going to perform your business enough so that the audience kind of has a gut check. It doesn't sound like there's a gap there. I had a team who are going to sell natural exotic juices in San Diego. That was their venture. So I asked them, operations question, how are you going to source your juice? Are you going to buy fruit or pulp or juice and then mix it? Who's going to mix it? How's it going to get done? And they said, we hadn't thought about that yet. So you don't want to be in a pitch and have that question asked. What would a practical person expect you to know about your operations at this stage of developing your venture? Management team, I mentioned the experience of your team. It does help if there's technical expertise, so someone's got a degree in computer engineering. Okay, that helps. Experience in other companies. Whatever you got that again, not irrelevant information. You want to be very to the point, and remember the key word is confidence. Can you build confidence in your audience describing your management team? Part of it is that you've thought out your management team, and somebody's not sitting there thinking, you know, this person hasn't thought about a chief financial officer or a chief technology officer. So you check 2 blocks. One is you say, I know what skill sets I need. And then second is I filled them with these people who are going to be good and be able to execute. A key idea here is that an investor is going to be thinking about what's called execution risk. And that is, can they trust your ability to actually get all this done? Do you look competent? Do you look like you have integrity? Do you look like you'll work hard? Those are the kinds of things that they're going to be asking. And you and the management team are probably second only to the product in terms of what they're checking off in their mental list about should I have confidence in this venture. Okay, here's the key part, ask and uses. You are in just a general top line scenario going to be asking for a certain amount of money from an investor for a certain portion of ownership in your company. You're not going to say how much of your company you're willing to give up at this point. That's for them to offer to you. All you need to do now is say, here's how much money I need, here's what I'm going to use it for, in very broad categories. If you do it the way that I do it, this is going to be 4 or possibly 5 bullet points, that's all. Strong temptation to show your spreadsheet, like your cash model, or some financial pro formas where your break even is, that J curve that's going to take off in 24 months, all that kind of stuff. So I'm an entrepreneur. I'm also an academic. I'm a professor. I go to academic conferences. This happens over and over again. It drives me crazy. Somebody will show a statistical model with 4 different treatments, 4 columns of maybe 30 numbers in each column that shows the analysis that they performed in their to write their article. And they'll put it up and they'll say, I know you can't read this. Why are you showing it to me if I can't read it? So the same thing here. Don't show an income statement that people can't read. Instead, my idea is one bullet point. I need $100,000. I'm going to use 50 to hire code developers and to make sure I've got the best app out there. I'm going to use 25 to market it, hire a marketing person, and 25 for administrative expenses. That's it. 103 categories how you're going to spend the money. And they'll look at that and they'll say, I don't think they need 50 for coding. Or yeah, that makes a lot of sense. Okay? So again, their gut check in 7 minutes of your time on are you right in terms of what you're looking for and what you're going to use it for. So ask and uses. The other key takeaway is don't say what you're going to give up for it. That's for them to say. Okay, if you have time, and this is my summary as well, just say, this is going to be a terrific product in this market under these conditions. I've got the management team to make it happen. Thank you. Or questions. There's an expression about lecturing and giving a lot of information in a short period of time called sipping from a fire hose. You may feel like that right now. So if I haven't kind of just put you in a numb state with all the information I've dumped on you, I'm happy to take questions for the last few minutes. I think we have about 15 more minutes. We have 15 more minutes for questions. Whatever, anything that I've covered, I'm happy to respond to it, or some things that I've left out. There's a lot of that. So ask away. Yeah. Yeah, so the question is what should your MVP look like? So the way I go about that is to combine it with, so MVP is a concept from this lean entrepreneurship school of thought. And it is get into the market as early as possible. Don't build out the perfect product with all the bells and whistles and be into the market 24 months from now. Do something that at least gives you a test of your audience or your market in 3 months or 6 months. Where that cutoff is, nobody tells you. So I say tie it in with this notion of a conjoint analysis. Go through the exercise of listing all of the characteristics of your product, everything from packaging to functionality to how does it work. Make that list and then use your own judgment. Where do I make the cutoff? What do I need this to look like? And if there's a break point, that's your MVP. This is an interesting thing though. A weakness of MVP is that you may have a product that you have to build out everything in order to get a test. So the concept of MVP doesn't really help you even. So I think that if you can conceptualize the idea of a list of characteristics and a cutoff point, that maybe 5 things get 80% of the value in your estimation, then that's how to do it. Yeah. So I would expect, if you're in a fundraising mode, I would expect it to take 9 months, 12 months. And that's being conservative. But you could have to take 300 meetings with 30 investors to get the money. And then you think about that. So build that out. 30 investors, first time meeting, you prep for it, you travel to it, they'll come to your lunch, or you just get 10 minutes of their time, probably a half day. So how many half days go into building that out, right? So I would say months and months. The reason I say standard deviations is this. We had a speaker not too long ago who has a product that is a body surfing board. So you strap it on your hand and it gets you into the wave faster and keeps you in the wave better. His brother-in-law was on a plane working on a video for the product while they're in flight. And the guy next to him saw the video, and by the time the plane landed, he had $60,000 of investment money. So what do you do with that? Fly around on planes a lot with your video showing? So quick non-funny answer. Actually, the whole thing was not funny, obviously. But the non-funny answer to your question is count on months and a lot of meetings. So the question was, what about a social entrepreneurship project that is not going to give the ROI of a strictly for-profit one? So here's what I think about that. Think about a range of ventures from pure profit, all you're doing is making money, to pure altruism or pure charity, and no investor is going to fund it. So there's some mix in between, right? Finding the investors who part of their investment decision is I'm benefiting a group or I'm benefiting, the social part of it is valuable to me. I think that's the key piece of it. So finding who to pitch to. Yeah.
Are you at a large deficit if your entire management team is just you?
Define deficit. At disadvantage to getting money?
Yes. I mean, when you're presenting, you're talking about it, I can see the value of maybe having the advisors on board and people to kind of give you a little more clout behind you.
Right.
But at the stage where you're looking for money, especially as it's truly starting up, it might just be you in the management team. Does that put you at a disadvantage?
No, not necessarily at all. So one of our favorite examples, successful entrepreneur from USD is Jayla Siciliano, who started a wine spritzer company, half wine and half like club soda, pre-bottled, called Bon Affaire. And she's done terrifically with just her. Actually, she's one of 2 and going to be 3 USD entrepreneurs who have gotten funded by Mark Cuban on Shark Tank. I think where it might be a disadvantage is in this gut check, in this confidence piece I'm talking about. So if you say, I'm the management team, and an investor says, well, what's your expertise in finance? Or what's your expertise in technology? And you say, well, I don't have any. That could affect your credibility. I want to show you 1 and possibly 2 of these 7-minute pitches from the V2 pitch competition. If you've been, you've probably seen these. If you're not, they'll kind of put some realism and some practical, concrete evidence around what I've been talking about. So the first one is 2 women who actually started a venture in my MBA class called Lacey. And I'll show you that. And then the second one is Tech Meets Trader. So I think the volume is all queued up. If it's not, I'll stop it, but let's try it.
I'm Jessica Court, co-founder and CEO of Lacey, an automated solution to wash bras quickly, easily, and gently, the way they should be. I'm sure a lot of the bra wearers in the audience will know how I felt the last time I pulled my bra out of the washing machine, only to find it torn, completely stretched out, and the wire broken through the cup. I'd had enough. Plus, when I realized I'd spent $75 on that bra and I was throwing it away, I was furious. Sure, I could have hand washed it the way bra manufacturers recommend, but I don't have time for that. Plus, it's a messy process, and it really doesn't even work.
Text Robbie, she's got the thing sitting.
Turns out, 80% of women also wash their bras in a washing machine. And 2/3 of women actually report ruining bras in washing machines. So this is pretty shocking. It means we're throwing away $10 million a day in ruined bras. Women are trying other things. They're wearing them in the shower or putting them in salad spinners. And some aren't washing them at all. This is a big problem. As it turns out, Lacey is a clean solution we need today. It's convenient. You can store it in a cupboard or under a sink. It extends the life of bras by twice as long as washing in a washing machine. It's efficient. The cycle is half as long as a washing machine. And it's adjustable. It's intended for bras, but you can also wash other delicates like blouses, sweaters, and bathing suits. And it's neat. No messy spills, no refilling mid-cycle, and no washing the tub before you have to wash your bras. Lacey is the spa for your bra. It holds them securely while it gently washes them. It's about the size and shape of this box over here, but we can't show you the insides because of proprietary information. As you can see, it has capacity to wash up to 5 bras at once, or 3 pounds of delicates. Excuse me. Americans spend $6.5 billion on bras every year. And according to our research, 75% of women report spending $40 or more on a bra, even $150. This is a major investment. they really want to protect them. There are 125 million bra wearers in the United States alone. And according to our survey, 40% said they're likely to purchase Lacey based on a description alone. Our market research also supports a projected retail price of $199, the same as our cost projections report. And this puts us at a competitive margin with other small appliances in the industry. We know as a direct-to-consumer product, we'll be investing heavily in brand awareness upfront to drive consumers to our website. Lacey is a good contender for crowdfunding sites to drive visibility. Our next phase in sales would be developing strategic partnerships with high-end lingerie companies, as well as detergents geared for delicate washing. And it's important to hit those sponsored posts on style and tech blogs like Bradabase and Tech Insider. Before we move on to phase 3 in sales, we want to make sure we have our inventory management covered and secure. And once we're retail, we'll be in-store and online anywhere small appliances can be purchased. Since Lacey will last years, we know it's important to have our pipeline of complementary products available to keep those repeat customers and recurring revenue. We already talked about the horrors of the washing machine and the inefficiencies of hand washing. There are a few other options out there, but none tick the boxes quite like Lacey. We asked consumers what was most important to them, and they said they wanted to wash up to 5 bras at a time in a compact space on a regular basis, and they wanted something that would help dry. Lacey is the only option that does all of those things. We have an exciting timeline ahead of us. We're on the verge of filing our patent and trademark applications. At the same time, we'll be moving on to our next level prototype that will be sleek and user-centered in design. Then we'll be moving on to intensive testing and investing in marketing so we ensure we get our first model out after 18 months. Once we're in retail, we'll scale that to over 10,000 units in 3 years. And as you can see, we have aggressive growth projections into the 5-year mark when we'll be considering strategic buyers. We know this demographic because we are this demographic. And that combined with our past experience makes us the right team to launch Lacey. I've had numerous experiences working with startups, including most recently, I started a nonprofit, and in a matter of months, we had earned revenue and philanthropy support. I have 5 years of marketing experience, which means I'll know how to make Lacey reach the right audiences. Stephanie has great process improvement, quality assurance experience with her background in operations and customer service, which means she'll make sure we scale efficiently and effectively. We've sought extensive advice from great mechanical and electrical engineers in the prototyping process, and of course, have worked extensively with legal advisors in patent application process to ensure we're not stepping on any prior art. We're really proud of where we've gotten with our existing prototypes and our testing, but we're moving fast. With your investment of $50,000 today, we can ensure that we file those applications quickly, and we get to that next prototype very quickly. That way, we'll be at a value inflection point to raise further funds and get to production and sales rapidly. We envision a day when the hand wash only tag says Lacey wash only. And shoppers don't think twice about buying delicates because they know they can wash them securely and regularly at home. Bras work hard. They deserve better. And so do you. Thank you.
Okay, so that is one of the finalists in the last V2 pitch competition. 2 of our MBA students, and they were successful in getting funding for their venture. I hope as you listened to Jessica, you heard proof of concept, description of the management team, their credentials, a description of the product, description of the market, the value creation, the differentiation, all the rest of it. And so that's a quick illustration. There are tons of resources available to you on our website. It's USD Entrepreneurship, that's one word.com. All of our V2 pitch competitions have been videoed, thanks to Scott and his team. And our Legacy Entrepreneurship Conference, the workshops like this one are all videotaped and uploaded and available to you. So lots of resources. Ask questions. I'm available. Regina's available. We have great coaches and mentors. We have the USD Legal Entrepreneurship Clinic. So there's a strong network out there to support your entrepreneurship efforts. and we hope you'll take advantage of it. So thanks for coming. Appreciate your attention, and good luck. We'll see you in the spring.